Hey, folks, welcome to InTheMoneyStocks.com's weekend technical analysis video brought to you by the creators of proprietary price, pattern, and time methodology. Learn the PPT strategies and profit for life. My name is Gareth Soloway, Chief Market Strategist here at InTheMoneyStocks.com. All right, folks, this video is for Monday, February 4th through Friday, February 8th, 2013. Let's take a look at exactly what the markets did last week. This is an intraday 10-minute chart zoomed out showing all 5 days of last week. And you can see overall we gained about 1 point on the SPY. So again, if you go back to just before last Monday, look at that. Right there, we closed at 150.25 or 24. This week, guess where we closed? 151.24. So again, it's so interesting how the markets work because throughout the course of the week, it was really choppy until Friday. And then on Friday, what we saw was just a nice up day, the Dow reaching for 14,000. And again, on Fridays, you always anticipate 14,000 or major levels getting hit on the Dow Jones Industrial Average. So again, Dow closed on Friday at 14,009. S&P at 1513, up 15 points, and NASDAQ up 37 points to 3179. But the real key, again, is the Dow 14,000. Let me explain briefly, folks. Every Friday or any Friday that the markets are close to a major level, always assume they will get there. Why? Because what you're looking at is a situation where on Friday you get the biggest bang for your buck by closing a market at a key level. What do I mean by biggest bang for my buck? Well, essentially, if you're trying to get the economy stimulated, you want a Friday close to be above that major level because that's where it's going to get the most media attention. All right, that's where the most people will go out shopping because they see their 401ks go up. All right, so again, Friday Dow closes at 14,000 or above. Friday night on the nightly news, 14,000 lead story on the markets across the news media. All weekend long, the news media pumps it. The average retail investor is seeing 14,000. They're feeling good about themselves. My 401k is doing better. My IRA is doing better. This is fantastic. Not only that, it's Super Bowl weekend. Let's go out and spend. Let's spend. Let's buy an extra 100 wings for the Super Bowl. Let's buy an extra couple pizzas. Let's go buy a new TV for the Super Bowl. This is great. This is awesome. I'm making tons of money. And that's what you have to recognize in terms of how the market reacts and why weekends are notorious for key levels. Going back 1 week to a week before, last Friday, a week ago from last Friday, I should say, the S&P closed above 1,500 for the first time. It's not a coincidence these closes occur on Fridays. And again, for last Friday, the week before Friday, the reason being 1,400 or 1,500 on the S&P. The market gets pumped up all weekend long, and then you get retail investors to spend over the weekend and come in all jovial. Okay, so that's what we have here, folks. And again, Spiders closing at 151.24, up 1 point. Basically, that's the equivalent of about 100 points on the Dow Jones Industrial Average, which closes us above that key level. All right, so again, that's what we're looking at here. Markets going into next week. Let's project out. All right, so we had a small gain this week, but enough to close the Dow over 14,000. And now you're looking at a Monday that most likely will be up. You might say, well, why is Monday going to be up? I don't think it's going to be up big, but what I'm anticipating is kind of a small up day on the Spiders, 50 cents or around there, and then the S&P maybe up 5 points or 4 points or 3 points. And the reason I'm saying that again is because what we're looking at is a market that is going to coax the retail investor in on Monday. Mutual Fund Monday is on Monday. That's where every month, the first Monday of the month is usually known as Mutual Fund Monday, and we see new money flowing into mutual funds, which is more inflows. We also talk about the average investor getting so giddy over the weekend, hearing 14,000, got to be in the market, got to be in the market. There's buying there. And then, of course, you just have the aspect of a Monday light volume, which usually will be neutral to higher as well. So assuming no crazy events happen over the weekend, nothing happens, on the Super Bowl or anything like that, assuming nothing like that, you're looking at a neutral to higher market on Monday. All right, I think that's about it, though. I think the rest of the week you're looking at neutralish sideways action, maybe a little bit of a float up. What I'm looking at is a target this next week now. And again, I would have thought the markets would have pulled back by now. You only got a couple day pullback last week, not much, maybe a buck in total on the SPY. But now at this stage, because we're above the 150 level on the spiders, you have to be looking for the 152.40 level. Now, what's so important about the 152.40 level? Well, if you zoom out on the spiders here and you go back to 2007, see this little pivot high right here? That's the level right there. It actually extends, believe it or not, all the way up to about 152.75. But nonetheless, I mean, just to be aware, anywhere between 152.40 and 152.75 on the SPY, that pivot top, you have a tail right there, and that's why you get that variance in price. But that would be your next major resistance. I do believe that gets hit coming up here, and most likely early in the week. I actually think Monday or Tuesday will hit that level, and then mostly sideways action following that. All right, I do think the markets continue to be extended. I don't think anyone would argue with that, but the question is, when is there going to be enough volume? When is there going to be a catalyst for a reversal in the markets that's going to have legs? I mean, obviously we're going to have a down day or two this coming week. I mean, it's going to be minor down days, but the question is, do we have any catalyst for a big down day? I think, honestly, it's going to come from events overseas. I think Europe could be a catalyst at some point. All of a sudden, everything's going whippy and great. The dollar could be a catalyst. We're seeing a head and shoulders pattern on the dollar that is borderline triggering. And if you go to the UUP daily and I zoom in here, you can see the head and shoulders very, very clearly short term. All right, here's your shoulder, head, and then shoulder right here, and we're borderline triggering right here, borderline. So that's one pattern to watch. Does it trigger? Does it fail? What happens here? And we're going to keep an eye on that. I also think the European markets and the FXZ is important. Look at the FXZ, guys. This is an extremely extended chart. You got to start to believe that the FXZ's got to come back in. There's got to be more concerns over what's going on in Europe. So far, everything seems to be perfect in Europe. Oh, Europe never even had a problem. That's the mentality. The currency's getting extended enough where you would expect a pullback off of that. So keep an eye on that. Also, the yen, excuse me, the yen, the FXY, is coming into its target from its head and shoulders pattern. This is one of the most amazing head and shoulders patterns I've ever seen in my life. I mean, just tremendous in terms of its nature here. Look at this. I mean, look at the size of that and how the trigger, it was a beautiful trigger. This is where it triggered right here. And if you went short on that FXY, look at the fall here. Target for this is right here. So it still has a little bit more to go, but when it reaches target, that's where it could bounce, and that's something we have to pay attention to right now. So again, we'll watch very, very closely on the FXY and see where it goes. But nonetheless, amazing charts out there. So there's definitely, you're definitely coming to some sort of pivot point. And you could even make a case that you're coming on JP Morgan to some sort of pivot too, and JP Morgan's known as the market. But look at this. I mean, here's your JP Morgan daily going back to 2010 high right here, 2011 high, and then look at this. So, I mean, you have to anticipate based on the extended move here that you have some sort of pullback on JP Morgan off that level. So, again, there's a lot of things coinciding here. The currencies are beginning to show us some sort of sign. We're not there yet. Same thing with JP Morgan. It's coming into resistance. It's not there yet. But I would guess that this week is the week it hits, and, we'll keep track of it. We'll keep our eyes on it, all right? So, I think that's a very fascinating factors here to watch. Taking a look at Apple. Apple was weaker on Friday. The one reason I think this is important to note is it was beginning to make a bullish pattern off of this up move. But the question now in my mind is, when the Nasdaq's up 37 points on Friday and Apple's down, is that showing us some sort of weakness or bigger signal here? And, the pattern itself is still okay on the daily chart of Apple, but I am beginning to wonder if the weakness shown on Friday is telling us it's going to that 420 target, which is what I've had for quite a while now. And amazing how it's come all the way down here from where it was. And again, just to think the analysts were out there pumping this thing at $700. Nick and myself here at In the Money Stocks were saying, short this thing, it's going down. It's going down to at least 500. And obviously now our target even lower than that, 420 on it short term. Amazing. Absolutely fantastic move. And again, a lot of members actually had been holding for quite some time and made quite a bit of money on those. All right, a couple other stocks out there. Take a look at Google. Google came right up, big day on Friday, up about $20. The most fascinating thing about Google, take a look at this. The high from 2010, take your trend line right across, resistance right into that point as well. So there's actually good resistance on Google. I was thinking about shorting Google, but I don't think I will, mostly because it's too strong of a stock. All right, and see how this one almost outperformed the market, or it did outperform the market. I'd rather short a stock like Apple or some stock that is just kind of performing with the markets, but not outperforming the markets. This is kind of the strongest bull in the house, if you will. I'd rather go for something a little bit weaker. So even though you expect Google to have some resistance here, I don't think I have the guts to short it personally. I don't think it's a smart move to short it. Another stock I think is going to go lower here, Amazon. Amazon had that crazy gap up on earnings and has just fallen straight down. On Friday, it was down another 50 cents when the market was rallying substantially. Remember, always look for relative weakness out there. It's a very important key, and it's telling you, it's a signal. 99% of the time, it's a signal of price movement. All right, if the markets are up 1% on Friday like they were, and you see certain leading stocks that were down, you got to take that as some sort of a clue. So again, Amazon down 50 cents to me tells me it's probably headed down to the 50 moving average around 258, and then the aftermarket lows from earnings were actually 250, and it could actually head there. I wouldn't be surprised if next week we see 250 even, down another 15 bucks in total on Amazon. All right. All right, so that's what we have there. Let me just see Goldman Sachs into resistance in my opinion. Isn't it an amazing chart on Goldman, guys? Absolutely amazing chart on Goldman. But one thing to note here, folks, you filled a gap here, and the 150 level is a key level. So we are into resistance on Goldman Sachs. I am looking at this as a possible short, although I think I'd rather short JP Morgan Chase. Again, this is one of the stocks like Google that is stronger than the overall market. Therefore, I'd rather be a little bit cautious on it and maybe go with JPM, which JPM in all fairness is a very strong stock too. But at least I have a better pivot point, a triple top on an extended move. We have time factors in there as well. So if I'm going to short, I think that's the one I'm going to pick instead of Goldman Sachs. Goldman Sachs, if it continues up, I actually do have a good level if it just continues to grind higher. This pivot low right here, which is a little bit higher, would be intriguing. And then there's a gap fill right here. Right, one of these two levels should be actually a good shorting opportunity, but I'd let it at least get to this one, maybe even the higher one above that. All right. What else do we want to talk about here? Anything else? Chevron and Exxon, both stocks were kind of neutralish on the week. It was interesting because Chevron hit my key level I've given to you guys pretty much in every video. I've talked about the gap fill here on Chevron. It went right there. Basically on Wednesday, I think it was, pulled back 2 straight days. Then earnings came out and it popped back up. But still, I mean, look at the pullback you got on Chevron off of that. It was about a $2 pullback on the stock off that high pivot, and then a little bit of a bounce on earnings. But nonetheless, most likely short term at a top on Chevron. There's a chance it goes a little bit higher here, but I think at the most part this thing is getting tired. All right, very, very tired in my opinion. All right. On that note, I think I'm going to step aside, guys, move on, and get back to studying the charts this weekend. I encourage you to come to InTheMoneyStocks.com, take the 7-day free trial, learn the proprietary techniques that allow us to call the markets with insane accuracy, 80 to 90% success rate if the methodology is used correctly. And again, we'll teach you how to use it correctly so you can do it on your own as well, but we'll give you our swing trade alerts. Whatever stocks I'm trading, I'm giving out to our members here at InTheMoneyStocks.com. Again, come to InTheMoneyStocks.com, take the 7-day free trial to the Research Center, and that's again if you're a swing trader or an investor. Take care.